clients can use their fully paid property. Residents have to pay a down payment of 20 to 25%. Very important to know your financial status and how much money the banks are willing to give you.
How long it will take, usually the process from start to end?
Pre-approval can usually come between 2 to 3 days.
Today we have Asta with us. She's mortgage consultant and she will share all the details and tricks about the loan if you would like to apply, especially if you're buying the property in UAE. And I remind you that we are Sunset Sellers. My name is Victoria. If you're looking for a beautiful apartment in Dubai, we are very happy to help you with that. And my first question will be, can you please give a small overview of the mortgage options available for home buyers in Dubai?
Okay, so Dubai offers a variety of options actually. For an under construction property, there is offline mortgage. For a ready brand new property, there's handover mortgage. For if you're buying it from a previous seller, then it's a resale mortgage. Clients also have an option to do a buyout, which basically means refinancing your current mortgage from a different bank for better rates and better services. There's another thing which is called equity release mortgage, which basically means that clients can use their fully paid property in order to get a mortgage for renovation or to purchase a new property. So UAE offers a variety of options for customers.
I would like to ask you the most important question that clients usually ask us. If they are not residents in UAE, if they are not living here, can they apply for a mortgage in Dubai?
Yes, Dubai is the only place where non-residents can apply for a mortgage. They can get up to 60% finance from the loan as per the property value.
And what are the main eligibility criteria for obtain a mortgage in UAE?
So there are a few criterias that a customer needs to meet, but they're very straightforward. As long as they're maintaining a good credit history, they should have a minimum 15,000 dirhams of monthly salary. Then age is also a criteria. They should not be more than 65 years old to apply for a mortgage here.
Okay, you said that it should be 15,000 dirhams. Is it before tax or after tax?
After tax.
After tax. And the client is supposed to be no more than 65 years old?
Correct.
And 21 minimum?
21 is the minimum age, 65 is the maximum.
And what about bank history? It should be salary coming every month or like some specific amount on the card every month. Could you please tell me more details?
Are we talking about non-residents here?
Yes, non-residents.
Okay, so if we talk about non-residents, the salary coming in every month doesn't play that big of a role, rather than maintaining a minimum average balance in your bank statements for 6 prior months. So basically a client is supposed to maintain a minimum monthly balance of 25,000 dirhams in their bank accounts for 6 months. So daily day-end balance should be a minimum of 25,000 dirhams consistently for 6 months, and then they become eligible for mortgages here.
Okay, very nice. And UAE banks, they accept details from another bank, for example, from Europe, it could be from Canada, from USA, or which countries are there?
They do. They accept all the countries except some restricted countries, which also those restricted countries are done by here and there banks as well. So pretty much all the countries are eligible to apply for a mortgage here. They do accept documents, but documents in UAE are only accepted in English and Arabic. So if the bank statements or any document is in, for example, Russian, they need to convert that document to English or Arabic. Only then the banker will accept that document.
I'm wondering, what is the maximum amount that bank can give to the client to cover the mortgage for a property? For example, if I'm resident here and my salary, I could say 15,000 dirhams, what do I need to apply for mortgage and how much can I get?
So if your salary is 15,000 dirhams, right, it depends on multiple things. It not only just depends on your salary, it also depends on your credits. For example, personal loan, auto loan, total credit card limits, if you have any prior mortgages or anything in your history as well. All these factors are also considered to calculate your eligibility requirement. So what's going to happen is, and then it not just depends on your salary, it depends which bank we go with, because every bank has a different criteria on how they calculate the amount of loan that a person is eligible for. To give you a rough idea, someone with a 15,000 dirhams salary and no credits, no personal loan, no auto loan, no credit card limits, will be eligible for $1 million in mortgages from the bank, considering everything else checks out, like their minimum tenure that they're working with the company is over 6 months and other criterias. As long as they match all those criterias, they can be eligible for a good 900,000 to $1 million in mortgages from the bank.
So you said the credit cards or personal loans, for example, car loan, also important. You mean if you had it in the history, it's good or bad?
It's bad.
It's bad.
It's bad. If you have it in the history and it's already paid off, it's very good because that builds your history that you had a loan, you took money, and you paid it off. That gives you a good star. But if you have a loan right now which you haven't paid off, if the payments are still ongoing, then it's bad because then that reduces the amount of more money the banks will give you. Because your salary is fixed, it's 15,000 dirhams. Based on that, you can only get 7,500 dirhams as a loan from the bank. But if you have a 5,000 dirhams auto loan going on, then the banks will only give you 2,500 monthly installment as towards your mortgage payment. So that's why it's bad if it's currently ongoing, but it's good if it's paid off.
If we would say, like, if you don't have only fixed salary, if you have passive income coming to your card or bank that you are using, it's a big plus, right?
It is, but the calculation again is very tricky. So it's a plus. I can't say if it's a big plus or not. So if someone's a commission person, right? Commissions are taken an average of 6 months. So the banks will add up prior 6 months of commission that they received, take an average, and that contributes towards your fixed income. And then if someone has a passive income from Airbnbs or short-term rentals, that is not even taken into consideration because short-term rentals and Airbnbs, they are not considered safe income from the bank because it's very fluctuating. Airbnbs can be rented, cannot be rented kind of thing. So it's not a for sure income that a client will be receiving. So that's why banks don't consider at all. Like it's not even average. They don't take at all into consideration for Airbnbs and short-term rentals.
Wow, I never know that.
Yeah.
Impressive. Okay.
Yes.
Sometimes you can earn from Airbnb a lot. And
Yes.
yeah, sometimes when it's low
But
season,
they don't.
it could be.
Because it's very fluctuating, right? So that's why banks will never consider. Even if you're making good money through Airbnbs, they don't consider that.
And when you're applying for a mortgage, bank will cover only the payment for the apartment, the full payment, or there should be like down payment the client supposed to give to bank or to the client direct. And what about the 4% DLD?
Okay, that's a very interesting question, which I get asked out a lot. So what happens is, every individual, based on their residency, has a different down payment requirement that they need to fulfill. So for expats, it's 20 to 25% that they have to put in as down. So what banks are going to cover is the balance 80%. So expats can get 80% loan from the bank. Now, if talking about non-residents can get only a maximum of 60% from the bank. So 40 to 50% they have to put as a down payment. Now, talking about the DLD 4% that you were talking about, what happens is that's called associate fee. So 4% plus 2% is the agent fee. The banks also cover a percentage. So if it's 80%, 80% of that 6%, the banks will cover in terms of expats or UAE nationals. And for non-residents, if there's LTV is 60%, banks will cover 60% of that 6% associate fee and give you that as well.
I believe we have to put everything on the paper because a lot of numbers, a lot of percentages.
Yes,
I hope
that's where I come
everybody will understand what we are talking about here. But if you want more details, especially about the property in UAE or mortgage advice, you know that you have to contact Sunset Sellers. We are here, and of course, we can also recommend you to Asta. How do interest rate on mortgage work, and what factors influence them?
Interest rates on mortgages are directly dependent on your credit history, salary, and employment history. So based on that, if all of these things are in good standing, your interest rate can be as low as 3.94% currently. These rates change. But if the case is a little tricky and some things need a little bit of adjustment, the rate of interest, the maximum rate of interest can be as high as 6.75%, which is still very good as compared to other parts of the world.
But it will be fixed rate because there is a floating rate and fixed rate. What about?
What happens in UAE is that for a maximum of 7 years, your mortgage is fixed. So if a bank is offering a product saying 3.94% fixed for 3 years, what that means is that for first 3 years of your mortgage, you will be getting 3.94% of the rate of interest. Then once the 3-year tenure is over, then comes the variable rate or the floating rate or the follow-on rate. That depends on that situation.
Okay. And one more question that I have in my mind. And what if client want to cover all their payment upfront? He doesn't want to wait. For example, he applied for a mortgage for 25 years, but suddenly he won a lottery and he want to cover all the payment. What the bank will do here?
That's a very interesting question. So what that means is early settlement of your mortgage. That's the term. Now, in terms of early settlement, bank usually charges a little fee, which is either 1% of the loan amount that you're paying or 10,000 dirhams, whichever is lower. Whichever is lower of 10,000 or 1% of the loan amount.
So you would like to say that if I want to cover all the mortgage, I can pay only 10,000 and that's it?
Yeah, you can pay it off. You have to pay off the loan and pay additional 10,000 dirhams as a fee, and then you can pay off your loan early.
Wow, it is really amazing. So just for 10,000 you can apply for a loan, and if you don't want to pay and wait 25 years and pay this commission to the bank, you can just cover it very fast. It is amazing, it's brilliant. We have very good condition for mortgage in UAE, I believe, one of the best in the world. Asta, could you please tell me what is the typical process of applying for a mortgage from start to finish?
Okay, so the mortgage application process in Dubai starts with a pre-approval, where the client applies for a pre-approval with the lender, and the lender assesses your financial stability, right? Once you get pre-approved, then the client can start searching for a suitable property based on their pre-approval. Okay, once that is done and the client has selected their property, the pre-approval is ready as well, then the client will proceed and the lender will do a valuation of the property to determine the actual worth of the property that the client is buying. After that, everything checks off. Then the lender will issue a final offer letter and a mortgage offer confirming that, hey, I'm giving you the mortgage, everything checks off. And then once the client signs that, the lender disperses the loan amount.
Okay, here I have few questions. First of all, how long it will take, usually the process from start to end?
Depends case to case, but if everything is clean and smooth, pre-approval can usually come between 2 to 3 days. Then valuation takes another 2 days. After that, if everything checks off, the final offer letter is issued in another 3 to 4 days.
So you could say that in 2 weeks,
2 weeks is
everything could be
yes.
ready.
If everything is good to go, 2 weeks is more than enough sufficient time.
Nice. Okay, and what about valuation the property? Because I'm originally from Ukraine, and back in my country we have bank representative come in checking the property, and they're given totally different price, much lower than the market. Is it occur in UAE, in Dubai, or very rarely?
It can happen in some cases. What happens is because the demand here is so high that sometimes the value of the property does come a little bit lower than the actual selling price. But it's our best try to make sure that the value of the property that the valuation team gives versus the selling price are fairly close to each other so the borrower can get the maximum amount of loan from the bank.
So how many percent it could be, like 5 to 10,
Variation?
20? Yeah,
it can depend.
Difference, I mean, from
the difference depends on the property to property. For a villa, it can be more than 15%. For an apartment, it can be 5 to 7%. So depends apartment to apartment.
And what is important? They check in only apartment or the building itself, like what kind of amenities building have, like the pool or
Both.
gym?
Everything
Both.
adds to the selling price, so does everything adds to the value of the property. The most contributing factor is the apartment or the property itself, but 1 or 2% is the surroundings of the apartment as well that contributes towards the value of the property.
So the condition of the apartment also important. For
Very
example,
important.
if it's upgraded, the bank could give you more.
Yes, of course. That affects because if someone has a good apartment, very well maintained apartment versus someone having not so very well maintained apartment, there's leakage and everything. So apartment with so much leakage will of course be valued lower than the apartment with everything working perfect condition.
Okay, great. It's very good to know. Asta, could you please tell me what are the documents required to apply for a mortgage?
Okay, so let's talk about a case which is the most common one because document checklist changes case to case. But let's talk about a regular, most common case, right? Someone who is a resident and a salaried. In that case, what documents we need is their KYC, so their passport, their family book if they are UAE nationals, and if they are expats, then their residency visa and their Emirates ID. These three things are very important, followed by their latest 6 months personal bank statements. Very important. Now, because we're talking about someone who is salaried, we need a latest salary certificate from their employer. Apart from that, we need latest 6 months pay slips from their employer as well. If the bank statements that they're giving us and the pay slips are going to a different bank, then we need to make sure that we have bank statements from both the banks. Okay, apart from that, we need one more thing, which is an address proof. Any utility bill, hydro, electricity, water, any bill will work. We need an address proof bill as well.
Okay, very interesting. And I have one more question. For example, if you don't have any history in the bank and then suddenly last 6 months you have some movement, then straight away you can apply for a mortgage. For example, you was not employed and then you employed and you have salary and then you have this history for the last 6 months and you have one bank. They will consider the history before or no?
They will, yes and no. So basically, usually what they need is a minimum of 2 years of employment history. So even if someone in UAE only has a history of 6 months, but in their home country, wherever they came from, then we need to attach a history of employment for 1.5 years from their home country, adding up to 2 years. So we need to make sure that we have their history of employment for 2 years minimum. Doesn't matter if it's all from UAE or 6 months in UAE and the rest in their home country.
And here, guys, you have to understand it. It's very easy to apply. You know what kind of documents are required and everything if you need, we also can help you with that. Okay, and how does the type of property, for example, if it will be off-plan or ready property, impacts the condition of mortgage?
That's a very good question. So financing an off-plan property comes with very strict conditions, honestly. So to begin with, of financing an off-plan property, the customer needs to put in a minimum of 50% as down payment. So 50% should be put in as a down payment to the developer. Secondly, the property that the client wants to get an off-plan mortgage, the property / the developer needs to be approved and registered with the bank. So both these criteria need to be met. Only then a customer can apply for an off-plan mortgage, which is very hard. Secondly, you talked about ready properties. Ready properties are generally very easy to take mortgage on and everything is good to go. Same process, pre-approval followed by valuation, followed by final offer letter. And ready properties comes with better rate of interest and better services, and clients can apply for mortgages very easily.
But for the off-plan, most of the property, they have payment plans. So basically the client, if they want to apply for mortgage, they're getting payment plan from developer and they're getting to cover this payment plan with a mortgage from the bank, or how does it work?
What happens is if someone, for example, a handover of the property is in 2027, right? And the final handover payment is only 30%. But when the client is paying the installments to the developer as per the developer's payment plan, the client, for example, runs out of money, doesn't have any more money to pay the developer any more installments. That's when the customer wants to get an off-plan mortgage because the property is not yet constructed, but they want to get a mortgage from the bank to cover the developer's payment plan. In that case, the bank requires first the customer should have paid up to 50% to the developer. So if the property is worth $1 million, customer must have paid 500,000 dirhams to the developer, and then only the difference will be covered by the bank. That's first thing. Second thing, banks only cover properties that are registered and accepted, approved by the bank. That project is only covered for off-plan mortgage. So not all projects are eligible to get off-plan mortgages.
What do you mean registered?
So developers have to register the projects with banks. So that's why when the developer registers a certain project with the bank and the banks have approved and accepted that project, only those projects usually get an off-plan mortgage.
Okay, I got it. And what about the last payment? For example, if a client purchased a property and he paid everything on time and there is a remaining paying after on handover, on keys, it's usually 30%, 40%, it could be 50%. What about this? It's also very hard to do.
No, that's actually very easy to do because that is called handover mortgage. So when the handover is within 3 months from today, for example, then we can do a handover mortgage on that property, and that is pretty much the same process, same criteria as a ready property mortgage for the handover one as well. So things only get tricky when the handover is in 2 years, but the customer can't afford the payment plan by the developer. If the handover is in 3 months from now and it is considered same as a ready property, and the customer can get mortgage on that.
And how the bank will check it? So the property is supposed to be ready in DLD or in Dubai Rest
So
somewhere?
there is a thing called BCC. It's called a building completion certificate, which is issued by the municipality. Once the BCC gets issued to the developer, then the customer can request a copy of BCC from the developer that the building has been completed and it has been approved, checked by the municipality. Based on that certificate, the banker will issue loan to the customer because the building has been completed.
Nice. Wow, guys, today we have a lot of information. I believe this video will be very helpful for you if you are looking for a property or you're considering to take it in mortgage. And I would like to remind you that we have Instagram and Facebook. Please subscribe for our channels if you would like to know more about property in UAE and any other topics in Dubai. What will be the charges if the person would like to apply for mortgage? Like from the beginning, the bank charges, your commission, and some hidden maybe amount. Could you please share?
Of course, let's cover that now. So we did already discuss the down payment in brief, but just to give you a recap, residents have to pay a down payment of 20 to 25%, and non-residents have to pay a down payment of 40 to 50%. Now, beyond that down payment, there are additional charges for the mortgage process. The first one is a mortgage registration fees, which is 0.25% of the loan amount. So whatever loan you're getting from the bank, 0.25% is the mortgage registration fee, followed by a property valuation fee, which ranges from 2,500 to 3,500 dirhams, depending case to case. And then followed by, which is very important, mandatory life and property insurance. So every individual needs to get a life insurance and property insurance if they're getting a mortgage on their property. It's mandatory. I can't give you numbers for that because it depends bank to bank. Every bank has a different rate of life insurance and property insurance.
But what is approximate?
Approximately it's 0.02%, 0.06% annually. So it ranges.
From the property value.
Correct.
Okay.
Life insurance is on the basis of the loan amount that you're taking. So it's percentage of the loan amount. And property insurance is on the basis of the value of the property.
Well, I would like to ask you now, maybe you can give us an example about the recent mortgage case that you had, maybe some difficult situation that the client faced and you helped them to go through. Maybe you have something in mind.
I do. There is a case which was a little challenging. So this guy, he's been working in UAE for 10 years. He has a golden visa and everything. What happened, sadly, when he applied for his pre-approval, within that time frame, he lost his job. So even if he was working for a company for 10 years, in UAE, it doesn't matter if you were working for 10 years or 20 years. Of course, it matters, but what matters more is that if you're currently employed or not. Because he lost his job, things got very challenging for him. He had an MOU in place, but he lost his job. So things were getting very challenging and tricky for him. Now, what happened, a month later, he got a new job, a new position, and salary credits starting coming in his bank account. We logged into his case with the bank with the new job, new salary certificate, new salary credit, and everything. But I think I mentioned this in previous portions as well. Length of business and length of service is very important. So a person needs to be employed with their current employer for a minimum of 6 months. But because this person lost his job, doesn't have an option, even though has a new job, but the new job has only been working for 1 month. He's not been working there for more than not even 6 months. So that's why the banks thought something fishy was going on. Banks didn't feel comfortable. There was still a risk. And then in UAE, there's also a 6 month probation period. So even if that person did have a job right now, but it wasn't secured, and banks only look at security because they're giving so much money as a loan, they need that money to be secured. So a person brand new in a position, who knows, might lose the job, right? So banks were trying to protect themselves, and they didn't accept that. They didn't accept his length of service being just 1 month, and that one particular bank rejected his application. Then at that point, I wasn't ready to quit. I tried hard enough, and then we provided explanations. There is something called confirmed employee. So even if an employee is only working for 1 month or 2 months, the confirmed employee letter, if the employee can get that, that secures your job. So if your employer is willing to issue you a confirmed employee letter, then that secures your job, and that's what the banks need. Banks only need a security. So once the job was secure, another bank was comfortable with a less than 6 month length of service, issuing them a loan based on the confirmation letter.
Wow, nice. I really like that didn't give up.
Yes.
You go through it, you helped your client, and it is possible. And I really believe that it's very good that he found his another job very fast.
Yes.
Because everything can happen in the life, right? Today we have job, tomorrow no. But it's when he already found the apartment and he really fell in love with it, and he applied for mortgage, and this happens. So
yes, it's literally the matter of putting in the effort. He went to other mortgage brokers as well, and most of them told him that, hey, it's not possible, and disappointed him, kind of thing. But if the kind of effort you put in towards a case, even a tricky case is possible to do.
And now we see that it's possible to apply for a mortgage even if you have a difficult case. One more important question: for how many years maximum a person can apply for a mortgage in UAE?
It depends on your age. So if the minimum age is 21 to a maximum age is 65, but the maximum years of the loan that banks give you is 25 years.
Just few questions left. Thank you so much for your time and all your brilliant answers. What advice can you give for first home buyers in UAE to secure themselves? What kind of challenges they can meet? Any advice?
Okay. So my advice for a first-time home buyer is to get in touch with a mortgage expert as soon as possible so they can check your eligibility, and in case if you're not eligible, they can guide you and make you eligible for the mortgage. Once you become eligible, then the first thing to do is to get pre-approved. It's very important to know your financial status and how much money the banks are willing to give you. You know your budget, and then you can do property hunting accordingly.
Okay, and what is the right moment to check it if you're approved or pre-approved, when you already found the apartment or you're still searching for it? What is the correct time?
It's always better to get pre-approved before you, like during the time you're doing hunting, start up your pre-approval process as well, because it's always better to have, when you give your MOU, it's always better if you have a pre-approval in plan, then things get done faster. So if you have a pre-approval, you're ready to sign your first MOU, and then everything gets done very quickly, then we can directly raise valuation. Valuation gets done in 2 to 3 days, and then followed by a final offer letter. So that's way things happen much faster if pre-approval and property hunting are both done simultaneously.
But doesn't bank need the specific apartment, like building, to check for you, or you just check in yourself first if you're approved?
For pre-approval, banks don't need that. That is not a requirement. If banks have that, of course, then the pre-approval will be different based on the property that you're looking for. But everyone, without having to choose what property you're actually buying, you can apply for a pre-approval. Pre-approval is basically done on the basis of your salary, on the basis of your age, on the basis of your credits. So it has nothing to do with the property that you're actually buying. The banks are reviewing their case and telling them that this is what you're pre-approved for, and then the client knows their budget, and then they can start looking for property according to the budget.
Okay, great. It's very good to know. And what are the tricks or some difficult situation that clients can face while applying for a mortgage?
Okay, so one most common challenge is overestimating how much you can afford, which can result in a lot of financial stress. Clients usually overestimate their monthly financial capacity, and so that's one major thing that I've seen people face. Then buyers should also be aware of additional costs such as insurance and other fees involved because they can add up. They can, of course, add up to a lot. So you should be aware of that as well. Other challenges that customers face is, like I explained in my example, loss of job is very important. And then having higher credits, such as too much auto loan, too much credit card limits, too many personal loans, everything that affects to your credibility as well. So if you have too many monthly payments going on already, banks won't feel comfortable giving another mortgage at a higher value again. So either banks will expect you to pay off your auto loan or pay off your personal loan. Once you've done that, then the bank is comfortable giving you another mortgage on the property. So that is another challenge that customers usually face, having a lot of credits on their history. And lastly, incomplete documentation. That is also a challenge that some people face. So it's always recommended to have all your documents in proper way, proper process to smoothen up the process and get the property and mortgage done faster.
Okay, great. It's very good to know. And you would like to say that better to cover all your loans that you have before, for example, auto loan or credit cards, to pay everything. If you have very good history, then you have a lot of chances to apply for a loan.
It's better, of course, because think about it like that. If you already have too much liabilities, too many credit cards, too many auto loan, personal loan payments going on, then the banks will give you less money. If the banks give you less money, you can afford a shorter, smaller property. But if you don't have any credit cards, if you don't have any auto loans, if you don't have any personal loans, then the banks will be comfortable giving you more money. More money will mean you can buy a bigger property. So that's why it's better to have low credits, less liabilities in order to get more money in terms of mortgage.
And is it possible to buy one apartment, and get mortgage for several people, for example, if their salary are less than 15,000 or no?
It is. It is somewhat possible, but it becomes very challenging. That concept is called co-borrower. So you can have multiple borrowers on the same property. So if I can't afford an apartment, I'll add my spouse or I'll add my father to the apartment MOU as well. Then the property will be in the name of both the people or three people, and so will the mortgage be. Of course, that's an option. People usually do that, but then the property also needs to be in the name of that person.
Okay, great. And one more question. So you said that the minimum is 15,000 to apply for the mortgage in UAE. Okay. It could be for residents and non-residents.
Let me correct you there. There are some banks which also do for 10,000, some banks which also do for 12,000. 15,000 is something that's recommended because that way you're safe, you're eligible for a good chunk of money in terms of mortgages. But 10,000 is the minimum where there's banks that are happy to give you mortgages. Now, talking about non-residents, we discussed salary is a very small concept. It's minimum average balance in terms of non-residents. So they need to maintain a minimum average balance in their bank accounts for 3 months to 6 months. And if they have that, then having salary is also a factor. So even if there's someone who's non-resident, right? They have a salary of 15,000, but they don't have minimum balance maintained. That doesn't make them eligible.
And if they don't have salary 15,000, but they have very good amount on the card,
then it's possible.
Then it's possible.
Yes.
Just not moving, just on the card, for example, 30,000 euro, it is possible.
It is.
Wow.
Yeah, for
very
6
good.
months.
So the minimum is 15,000, we could say very recommended, and you can get the mortgage 1 million. What is, for example, if you have 20,000, 30,000, how it's calculated? What is the maximum that you can get?
So for someone who has a salary of 60,000 dirhams, right, and with credit cards of 250,000 dirhams, then it's calculated on the basis that banks usually take 5% of total credit card limits, take that off your monthly salary. So someone with that kind of profile will be easily eligible for 2.5 in mortgage from the bank.
2.5 million dirhams. Okay, great.
But then these things are very tricky because they need to be calculated in a certain way based on a certain bank. So it's hard to give you numbers like that. Like if you have 20,000 dirhams in salary, you'll get so and so amount. That's not how it works. It depends on other factors as well. So to protect you, giving correct, so it's better if the calculation is done on a proper way, and then I can tell you exactly how much they're gonna get.
So it's from case to case.
It is from case to case.
Yeah, it was very informative. Thank you so much, Asta. And I will remind you, if you're looking for a property or property with the mortgage post handover, we are Sunset Sellers. We will be happy to help you with all these questions. See you in the next video.